This is Gregor Mikkelborg from Oslo, Norway, and I'm running the website Gullad Penger. And today I have the pleasure of finally speaking to Egon von Greyerz, the founder of Matterhorn Asset Management. And welcome, Egon.
Thank you. Nice to see you, Gregor, and good to speak to you. Yeah, certainly a lot happening in the world, so we'll have a lot to talk about.
Yes, I agree. And I'm really looking forward to this. But before we kind of get into the current state of the world, I wanted to ask you. You founded Matterhorn Asset Management 25 years ago, or thereabout. How was your, if I can call it, transition from not working in the gold space and talking about the monetary system? What triggered your did you have an epiphany? What was your transition? What was your journey like?
Yes, well, you know, many of us go through interesting journeys, and I started with conventional job in banking in Geneva, and then I went to the UK, where I was part of building up, you know, one of the biggest consumer electronic retailer in the UK called Dixons, and we built that into FTSE 100 company. But throughout my journey, I've always been interested in understanding risk and protecting risk. That was in my corporate life, and also now in my investment life, if you want. So in the 90s, I decided that I wanted to do my own thing and my corporate life, because I had a good run in that, and very interesting one. Then I set up my own investment company, and I was always looking at, you know, protecting the downside and the risk, and it was clear to me in the 90s that gold would be the right tool for that, physical gold, because we have a monetary system which has throughout history always failed whenever there is government or central bank interference, which there is almost all the time. So, you know, as you know, no currency has ever survived in history. They've all gone to zero without fail. So that's pretty easy, and you know, and people understood that, and they understand at the same time, and that the only money that actually has maintained its purchasing power throughout history is gold. But sadly, central bankers want to print money, and therefore they destroy the currency, and they can live with the gold backing for a while. But you know, as you know, the last time was, or when it was abolished, was in '71, when Nixon closed the gold window, and then since then, virtually all currencies have lost against gold 99%, and including the Norwegian kroner, of course, and therefore, to me, since I was clear that we were starting an era again when money printing would accelerate, and I saw the risk as elevated already in the early 2000s, and also the derivatives worried me a lot, the global derivative position. So therefore, we decided to set up, this is initially for ourselves and the people we advised or invested for, set up a business with, you know, storing gold, buying and storing gold outside the banking system, physical gold with direct access for the clients, and you know, in the safest vaults in the world. Primarily, we have the biggest private gold vault in the world in Switzerland, for example, in the Swiss Alps. Yeah, so that's what we did, and we really started buying properly in the early 2000s. And of course, nobody saw the risk then, but then, well, although we had, of course, the tech crash in 2000, the Nasdaq lost 80%, and then we went to the next one in 2006 to 9, and especially 2008, we had the crash. So, and then we will go through one crash after the other, and and since 2009, of course, there's been more money printed than ever, and just in this century, global debt has trebled from 100 trillion to 300 trillion. But of course, I count also the risk of the derivatives. A lot of that is a form of credit also, and a lot of it will probably turn into debt also as central banks try to save the derivative system. So, we are staring at maybe a 2 quadrillion total risking debt and liabilities, including unfunded liabilities and derivatives. So to me, it was very clear that since no currency has survived, and we're getting into the final phase of this monetary system, which really started in 1913 with the Fed, the foundation of the Fed. So therefore, it was an obvious choice for me, who was always interested in protecting risk. And therefore, so we started Matterhorn, and the website is GoldSwitzerland.com. And now we open it up for other investors a few years later, around 2005. And now we have people that we're helping all around the world. I have a passion for understanding what's happening in the monetary system and for protecting risk. And obviously, gold is the obvious choice because, as we said, it's the only permanent value in history. Of course, there are, you could say, land and some other things are also maintaining their value, but it's not as liquid as gold is. So therefore, as an alternative to money, which always goes to zero, it's evident that one had to have gold. Sadly, most central banks and most investors don't understand that.
And regarding central banks, I know you have an outspoken view on central bank as such, and I would love to hear it from you. But if I make a comment first on something that I've been thinking a lot about, is that the modern society will lack, and I think this was a lot more call it practice before, to have skin in the game. Central bankers or the central bank, they do not have skin in the game, and that is, I think, a very sorry state to run the world. They don't feel the consequences of their actions. We do, they don't. But please comment on central banks as such. I would love to hear that.
Yeah, no. So what is interesting is, of course, when the Fed was set up in 2013, and it was they had one of these secret meetings between bankers on Jekyll Island in 1910, and decided that they would form the Fed, which is owned. It's a private bank, of course. It's the Federal Reserve Bank. That's the central bank of the U.S. is held by private bankers. And not by the government, so they basically took control of the money, as the founder of the Rothschild dynasty said, and then give me control of the money, and I care not who makes the laws. And that was already in the late 1700s. He said that, and that's what the Fed founders they understood that too. And therefore, the principal central bank in the world is privately controlled. And of course, so they only get the benefit for themselves and their banker friends. And we have to remember that it's not just the central banks that are actually not suffering the consequences of all their disastrous decisions, but the same with the bankers. You just take private bankers. I'm talking about. You just take 2000, the crash 2008, and when most banks were going under, and they were saved by tens of or trillions of money printing from central banks, and not one. And of course, for example, Morgan Stanley and Goldman Sachs, they're also going under, but they were saved because it's these bankers that tell the Fed what to do. It's not the other way around, because they have a vested interest in the bankers. And you take I know people who work in, for example, Morgan Stanley, and I know that 2009 or 2008, when they were bankrupt, going under and had to be saved, the executives had the same bonus as the previous year. So you're right. They never have to take the downside, only the upside. As we said, the losses are socialized and the profits are privatized. So it's a wonderful situation. Bankers you never see a senior banker going to prison or taking the responsibility of his action. All they do is to take a small trader and blame him, and he gets the fine or goes to prison at worst. So yeah, that's a sorry state. But I think, as I've been writing about, I think we're coming to the end of this era now. But the end is of course the worst bit, because the losses, we've seen the bank system now starting to have problems, and 4 banks in the US closed within a few days and had to be saved, and we had, of course, Credit Suisse also in Switzerland, which the Swiss Central Bank, Swiss National Bank, forced a merger with UBS and had to support that. And I think that's the start of the problems in the banking system, and of course the ludicrous artificially low zero rate policy that we had for 10 years in Europe and almost in America also. That was free money for everyone, free money for the bankers, free money for investors, and billions were made out of that. But now, when all of a sudden interest rates go up, the cycle has turned. The cycle topped to 1980, and when US rates were near 20%, the peak rates, and of course bottomed around 2021. And now the trend is up of interest rates. It's not going to go straight up, but the long-term trend is up, and the banks can't survive this, and everybody's sitting on bond portfolios, for example, that are loss-making. All banks and also a lot of investment funds. I'm sure that Norwegian funds also are sitting on those kind of losses, and that's going to get worse. And again, management has been greedy. And rates were so low when rates went up a little bit, they started buying long-term bonds, finance it by short-term deposits, and of course that's why these U.S. banks went under, and that's why we're going to see the whole of the banking system is now going to get in trouble, because also they have to cut down on lending, because their books are looking very bad. The risk is they're taking too high risk. They have to cut down on lending, which will be a squeeze for lenders and borrowers, and a squeeze for the economy. So we're getting. So I've been expecting this for years, writing about it for the last 20 plus years. So it's not a surprise, but still, when it happens, and most people haven't realized it yet, because you see the stock market is booming. Property market is not booming, but it hasn't crashed yet. It will do. Nobody can know either investor in commercial property or private homeowners or a house owner can afford these higher rates. So, but it takes a little bit of time before it has an effect. But you combine that with a high inflation in everything, in oil, in energy, etc. So we're going to have some tough times in the world. Yeah. But it will take time before people realize it. But I think this year and next year is going to be very difficult for the world.
And yes, I agree. It seems that the consensus view among people is that they have this linear way of thinking that things don't move in cycles. It's just linear kind of upwards, and that things will solve themselves because they always have, at least for the last 40 years, as you mentioned, since 1981, we were at the top of the interest rate cycle. And I think a lot of people think that rates will go down, things will solve themselves, but you're not of that view. You think interest rates will go the other way. It has to.
Yes, well, what I think will happen is that, of course, if central banks, central banks are now on a mission to reduce inflation, of course, ECB even more than the Fed, from having for 20 years basically tried to get inflation up from 0 to 2%, their target. That's such an arbitrary target anyway. The shouldn't be, inflation should be 0. Because with anything above 0, you destroy the value of your money. But anyway, even if they had 2%, they never succeeded. And then overnight, interest rates went from 2% to 5 or 7, depending on the country, and inflation 2 or even higher. Inflation went up to 10% in many European countries. So the Fed think they're in control, but they are clearly not. They haven't got a clue, because as I said, they couldn't get interest or inflation up for a long period, and then all of a sudden it just jumps up, and they think it's only transitory, as they said. Both the Fed said and the ECB said, well, it's just temporary. Lagarde said that, and Powell said that. But transitory, they've been wrong again, of course. So I'm of the very firm opinion that central banks should not exist, and they actually just destroy the financial system by their interference. They make the peaks a lot higher and the bottoms a lot deeper. And instead, if they just let the natural forces of supply and demand take care of it, we wouldn't have these extremes, tops and bottom. And of course, on top of that is the money printing that is creating these bubbles. And of course, they shouldn't be allowed to print either. But since the gold backing of the currencies was taken away in 71, as I said, all currencies have lost 97 to 99% just in 71. It's scandalous. Only in this century, in 2000s, the currencies have lost about 80% in real terms. And when we talk about real terms, it's gold, because gold is the only permanent value, it's the only money that maintains its purchasing power. It's quite unique, really. And that's why it's really scandalous that all the Western central banks, they ignore the role of gold. I'm not in favor of having gold backing of the currencies, I think, because whenever you have a control, people will always cheat anyway. So it's much better if you had a free floating gold price without the manipulation in futures markets. And of course, as long as you have the futures markets and the LBMA also manipulating the gold price, we are not seeing a true gold price. But in spite of that, it's maintaining its value vis-a-vis the currencies extremely well. But I think I wrote in my last article that the central banks, first of all, the US with their sanctions and with their freezing of especially Russian money now, but they'll freeze anybody's money that they don't like, which of course means that nobody will want to hold dollars. Nobody will want to hold US treasuries. And that's why we've seen now a liquidation from all around the world. China, Middle East, Russia, of course. A lot of central banks are just getting rid of their treasuries. Therefore, the treasuries, the US government and the Fed is now going into a period when there'll be enormous pressures on the financial system and on the economy. We already have major deficits in America. US debt doubles at least every 8 years. and I think that will accelerate now. But there won't be any buyers of U.S. Treasuries. No foreign central banks going to buy U.S. Treasuries anymore. So the only remaining buyer will be the Fed. So government will issue the debt, and the Fed will buy the debt, and that's of course disastrous. That's a vicious circle that will end in misery, because bond market. That's why I'm saying that the Fed will lose control of interest rates, because long rates will go up because nobody wants to hold U.S. bonds, so they can't control them anymore. And long rates will pull the short rates up, that the Fed has been better at controlling, but they lose control of all of that. And you add to that the fact that a lot of private bonds also will have real problems, because companies, borrowers will have difficulties financing their debt. So therefore, I see just natural forces pushing interest rates up, and central banks will not be able to do anything about it. I'm not saying it's going in a straight line. Nothing ever does, and they will try, every now and then to reduce the rates. But the trend will be clearly up, and for a long time. And with the debt, as I said, of global debt of 300 trillion plus all the derivatives and other unfunded liabilities I talked about, that will mean that the world cannot afford it, because interest will be a major part of GDP for most countries.
Mm.
And in the end, it will all, we'll get hyperinflation at some point, and when the hyperinflation, once it starts, doesn't last for long, because it can't. The money becomes worthless. We look at any period of hyperinflation. To take Weimar in Germany in the 1920s, in the final stage of it in 23, it went from low inflation up to millions of percent, basically. So it ends, but then I think it will end with an implosion of the financial system, sadly. So not easy times ahead.
No, it isn't. But there are some what do you call it, tailwinds for gold. We can talk about BRICS discussing the trade currency or settlement in gold, and there's a meeting I think in South Africa in August of this year. But then you also have several. I've been reading more and more about that the last, I guess, 6 months or last year, about the American states. At least some of them are passing bills to again make gold and silver legal tender. And the last one I read about was Alaska. Of course, you had Utah doing this in 2011, I think. How do you view that? I mean, they have the reserve currency, but then there are on the state level opposite wins, if you will.
Yeah, I think that's an interesting trend with individual states doing it, but they've actually. I don't think it's got to make a big difference. The more interesting thing is that when now, the dollar has been the reserve currency of the world, and that's been the currency that most governments have been holding their reserves. But that's now finishing. It's not going to happen overnight, but it gradually is going to finish. And I think this is, and if you at the same time look at the trends you mentioned, BRICS, basically every single country in the world outside of the US and Europe want to join BRICS, so it's all South America, Asia, etc. What I think is interesting, a lot of these BRIC countries, of course, are commodity producers. So we can see a trend now. If you take Saudi Arabia sell oil to China. China pays in yuan, and then Saudi Arabia goes to this Shanghai Gold Exchange and changes those yuan for which they freely can do on the Shanghai Gold Exchange, changes that to gold, and then obviously they keep some in their reserves, and then they continue to trade with the gold and turn it on to a currency. And I think that's going to happen with a lot of countries. And I could see that gold can become a reserve asset and a reserve currency for central banks, replacing the dollar. Now, that doesn't mean that it's going to be a reserve trading currency for daily buying and selling of commodities or whatever. So that will they will obviously either swap gold, as I said, to currency, or the world. It will take much longer for the dollar to disappear as a currency for commerce and trading. But the reserves, which is totally different, the global reserves, central bank reserves, and government reserves, that could easily now turn into gold on a much bigger level. But if they do, of course, you can't. A value of gold at $2,000 per ounce is not sufficient for the amounts we're talking about here of reserves. So that could lead to that gold has a natural. It would be floating, but had a natural revaluation to maybe 10 times or 20 times or whatever the current price. I see that as a trend that is very likely, actually. Not because I'm a gold bug, but because of course I'm not a gold bug. Gold to me is just a means of protecting your risk. But here now, especially since U.S. is destroying its economy, destroying its dollar, and destroying its credibility, it is clear that the world will no longer think of the dollar as a reserve asset. And there's no other currency that can replace that. So therefore, gold is absolute natural for that. Bearing in mind that is, as we said, this is the only currency that actually has maintained its value in history. So that's an interesting development. It can, as Hemingway said when somebody asked him how do you go bankrupt? Well, Hemingway said first gradually and then suddenly. Yeah. And it's the same here with this. If we see a change to gold, it can happen slowly first, but then it can be very quick. All of a sudden, everybody wants to hold gold, and I can see that happening. So, of course, there isn't, because of the inflation we're going to see anyway in the world, all institutions, funds, etc., even the Norwegian Sovereign Wealth Fund, will start thinking about gold. I mean, they have 0 today, but they might go to 1% or whatever. But and of course, no institution ever thinks about gold in bigger terms than that. Right now, of course, world financial assets, only 0.5% of world financial assets are invested in gold today. But if that increases to 1 or 1.5%, there is not enough gold in the world. Nor is there if gold becomes a reserve asset. So the only way to change that is to revalue gold, and as I said, that should be floating revaluation. I think that will happen because nobody would agree to fixed revaluation. US couldn't afford to do it, most probably because they probably don't have the 8,000 tons that they declare they have. And anyway, Russia and China wouldn't agree to anything the US does anyway, and they are probably the ones, although they don't declare it officially, that have a lot more gold than they officially declared. So we have some interesting developments, but as I said, it'll be interesting intellectually, but it'll be tough for the world. A lot of people will suffer.
Yeah, and unfortunately, you mentioned the Norwegian Sovereign Wealth Fund, and I have to touch upon this since I'm a Norwegian. I live in Norway. And I would like to get your take on it. You've of course, elaborated a lot already. But as you said, the Norwegian Sovereign Wealth Fund owns 0% gold. The Norwegian Central Bank is actually the only central bank in Europe without gold. Croatia didn't have any until December of last year. When they joined EU, they also bought 2 tons of gold. Now Norway is the only country in Europe without gold. There seems to be, and there's no debate about this in Norway, at least not officially A lot of people are interested, but we are a minority. Could you comment this? What would you do? Would you buy gold, of course?
Yeah, well, I wrote about this several years ago about the Norwegian gold or lack of gold, because Norway had 34 tons of gold, which is nothing if you think about Germany, for example, has about 4,000 tons, and the US is said to have 8,000. Don't know if they do. And China probably they have officially 2,000 tons, and Russia too, but they probably have maybe 10 times as much, both of these countries, because they're not declaring their holdings, but they're keeping all the gold they produce themselves within the country. And little Norway, that thought that black gold will make them rich forever, I love Norway and Norwegians. It's not that, but I don't like the central bankers or the government. And they actually in 2004 sold the remaining 34 tons they had, which is nothing. But remember, just in this century, since 2000, gold in Norwegian kroner, I think, is up 11 times, from about 2,000 kroner to 22,000 now, isn't it, roughly?
Yes, that's correct.
Yeah. So that's incredible. They don't see what's happening. They don't see that they are Norway more than, a few years ago, everybody talked about, well, we have to hold Norwegian kroner, we have to invest in Norway because that's going to be the strongest currency, etc. And look what's happened. Look at the mismanagement of the government, of their economy. And as soon as you think you're going to become rich based on the oil, then you start spending it all before you've got it, and that's what Norway has done. And the currency should have been super strong, but instead it's collapsing. And of course, Norway seeing inflation now, but we'll see much higher inflation with that collapsing currency. And that's what central banks around the world are doing. They're destroying the value of the currency through their mismanagement of the economy and the money printing. Relatively, of course, Swiss franc has also lost against gold. Gold, of course, every currency does, but not as much as other currencies. I started working in Switzerland in around 1970. And it was 4 Swiss francs 30 to the dollar, and now it's 90 Swiss cents. So the dollar has lost 80% against the Swiss franc, for example. And I remember the Swedish krona was about 1.10, 1 krona 10 against 1 Swiss franc. And now it's whatever it is, 12 something. And it's probably similar with the Norwegian kroner against the Swiss franc. So there you see how because Switzerland is a well-managed economy. They seldom have deficits. They don't have high borrowings, and so it shows you it's possible to manage an economy at the same time as you actually get the people supporting you. Most governments are so weak that the only way they can buy support and buy votes is by printing money, and that's why they're doing it. They're trying to please the people, but then sadly maintaining massive deficits, and the end result is not helping anybody at all, but destroying the economy and destroying the value of people's money. And that's going to accelerate in the next few years, Gregor. And that's the end of an era, the end of a monetary era, which is a bit over 100 years now, since 1913. That's going to be horrible for the world, horrible for the people. But the world has always gone through those phases before. It's going to happen now also.
Yeah. I like history, and you mentioned Switzerland, and there was one thing I didn't know. that Switzerland actually had a gold-backed Swiss franc up until year 2000. Am I mistaken, or is that?
No, it wasn't properly gold backed. No, it wasn't.
Okay.
No, I think you're mistaken. I don't know if there was some. No, you couldn't exchange anything against gold in Switzerland, certainly until 2000. Then maybe that was a technicality that I'm not aware of, but there was never gold backed properly. No.
Okay. Okay. I just maybe the last comment on the Norwegian sovereign wealth fund, or the oil fund as we call it. I did some calculations last week, or a couple of weeks ago, just to show that measured in Norwegian kroners, the performance of the oil fund has been 7.2% per year since 1998. But if you measure the performance in real money, gold,
yeah,
the performance has been negative.
Yeah,
of course it has. But I find it so interesting, and I published this on Twitter. I don't have many followers on Twitter, but I think maybe 100,000 people have seen that graph. But for me, it's just a proof of the mismanagement of the sovereign wealth fund in Norway.
Yes, the thing is that most governments in the world and most central banks and managers of sovereign wealth funds, they suppress anything about gold because it reveals their dishonest actions in destroying the economy, and therefore they don't even like mentioning gold. And you see virtually never see a central bank talking about gold. You take Alan Greenspan. So, before he became governor of the Fed in 1989, I think it was, or was it 87 or 89? Before that, he wrote about gold all the time. About that is, only real value and the only currency of value. And as soon as he put on the political Fed hat, he never mentioned gold. And now again, since he retired from the Fed, he talks about gold again as being the only money that has survived in history. So, but sadly, when you become a politician, a central banker is a politician too, then you have to lie. And this is the horrible thing with the political system, that no one can speak the truth, because the truth is very ugly, especially when it comes to money and mismanagement of money and mismanagement of the economy. And as you mentioned, you're seeing a very good example of that in Norway.
Yeah. I think it's, I know what I would do if I was head of the Norwegian Oil Fund. If we could turn to CBDC, central bank digital currencies, and I know you've written about this too in your articles, and you speak about it, of course. If they manage to implement these digital currencies, is there a way out? Is there a way to bypass it for normal people like us?
Well, that's a good question, and we don't know is the answer, because it is not impossible that they're working. They know that the system, this fake money system that exists today, they know that is not sustainable, and therefore they know that it's likely to collapse. Also, they don't. So central currencies, and that's central bank digital currencies, while they're all rushing to implement something, it's a way of making that, diverting from the real problem. So they create a new currency and say, well, the old one, we just put the debt aside and that doesn't count anymore. Now we have a new currency. Of course, they're kidding themselves, because you can never get rid of debt, and the new currency is just going to be a digital currency. It's just going to be another fiat currency, another form of paper money, if you want, or it's digital. So that's not going to solve anything. It might delay the inevitable collapse for a few months or a year or whatever, but that's all in my view. And of course, if you do, debt always has to be repaid. The only way you can do, whether you either repay it or you inflate it away by debasing the currency. So that's what they're doing now, and that's what they are going to do. But they mustn't believe that if they create a digital currency, that will change anything. That will be hyperinflated too, because the system cannot be saved in any other way. Of course, you don't save a system by destroying your currency, but that's the only way they can do it. And when you destroy the currency and destroy the value of money, you also destroy the value of the assets that currency and those debts have been backing. So I don't. Yes, they, and also of course the horrible regimes we have now around the world that want to control everything we do, and a lot of that stems from the US also. But the EU is not far behind. Of course, they want by controlling everything we spend and not allowing us to spend more than a few hundred, depending on the country, or in cash, etc. Well, it's ridiculous. And there's most of us, especially us who understand money, understand the value of money. We are libertarians. We don't want to be controlled by governments. But that's what they want to do, and therefore, of course, they like digital currencies because you can have total control. Like all artificial things, I don't think it's going to last, but it could last longer than we would like. But it's certainly not going to solve the financial system. Now, will there be countries that or areas where you can avoid digital currencies as an individual? I don't know. I'm sure there will be many countries that won't have a digital currency. But if you live in Europe, I think most European countries will probably implement digital currencies. The only chance we have to avoid it is that the system collapses before they succeed with implementing digital currencies. So there'll be such a mess that they can't have an orderly introduction of digital currencies, or the people won't accept it. I mean, I would doubt that, for example, Switzerland makes a compulsory digital currency. This goes against the freedom of the Swiss and the free thinking of the Swiss. So I doubt it, and I'm sure that there'll be many countries in the world that won't do it either. But if we live in Norway or Sweden or England or Germany, yes, the risk is that they will try to impose it on us, and I don't think they're going to give us an alternative.
So sorry, but the one way to maybe bypass it is to start using gold and silver privately. But of course, they would have to probably outlaw gold and silver so that they force people into CBDCs. Totally.
But we've talked a lot about this. People ask also, are they going to confiscate gold or prohibit people from spending gold? My view is that first of all, remember, it's only 0.5% of world financial assets. Sure, if it's revalued, there's going to be something different. But I think governments, why should they confiscate gold? Why not confiscate houses and your investments and your? I think there's so many other areas. For example, when the banks failed in 2008-9, then they and there were bailouts by governments in most countries. Then it was said that next time we're not going to do bailouts, we're going to do bail-ins. Which means we're going to take the money from the depositors, not from the government, and pay for everything. Because the first bank failures now in the USA and also the Swiss one. That was again government that came in and supported. But in the end, they won't be able to, and I think there will be bail-ins instead. You take the US, which will be in desperate need to finance its deficits. They will force people. They will say, we have an offer you can't refuse. They say, we are going to sell you our wonderful treasuries or a 30-year period or whatever, and or 20-year period, and you have to stay invested in that. And of course we will pay back the full value, maturity plus interest. The only thing is that the full value is will be debased by 99% because of the increased issues of debt and money printing. So but that's I can see that happening, and there will be bail-ins. And what I'm saying is also that there are better ways of confiscating assets than just asking people to hand it in, because gold is so widely held around the world now by private individuals in private vaults outside their own country, etc., which is the way you should hold it, really, in my view. That they hold it outside your own jurisdiction, so you can flee to your gold if you need it one day, and the government wants you to hand it in. But the much more elegant way for governments to confiscate money is, of course, through taxation, and that's what we're going to see. We're going to see much higher taxes around the world. It's happening already. We're going to see, like you're seeing in Norway now, wealth tax. And high wealth taxes for wealthy people, which forces the very wealthy, of course, to leave Norway, which is not the way it should be. You want the wealthy to stay. You should encourage them to stay, low taxes, and encourage them to invest. Instead, the way the Norwegian government is acting, and every government is going to do the same. You're actually forcing them to leave to a better place, which doesn't steal all your money. But sadly, it's always been popular to tax the rich. They don't make much money from it, but it sounds the people, they think the people like that. But it's not good for the economy, and the consequences will be dire. But as I said, a lot of governments around the world will increase taxes, and I think that's a much easier way for them to confiscate people's money than actually to take their assets. They could take property. All property is much bigger than gold, so why not take property? But I don't think they will do. They'll just tax it more and more, and of course, the people won't afford to pay the taxes because they'll be very poor. But that's the way it will go.
Yeah, I agree. And by the way, have you noticed Norwegians in Switzerland to a larger extent? Because that's a lot of people talk about that for the time being.
Yes, of course they are. It's Switzerland is the I have a Swiss and a Swedish passport, and I've lived a long time in England also, so I'm quite international. But I lived in shorter periods in America. But as far as I am concerned, I think Switzerland is politically the best country in the world. No country is ever as good as it was. Switzerland is not that, sadly, but because Switzerland has gone off its neutrality a little bit in connection with these Russian sanctions, etc. But overall, you got people power. You got actually self-determination. People can actually vote about anything in Switzerland if they want to bring up an issue, and that's called direct democracy, and it's a wonderful system. And the politicians, there's always been a coalition in Switzerland. The politicians interfere very little in the lives of daily people, and much less than any other socialist European country. So from that point of view, yes, I can understand why Norwegians move to Switzerland and other people too. And of course, Switzerland also, the tax system is wonderful because the cantons determine their own taxes. They have to follow certain overall rules regarding the federal tax that they can't avoid. But all the most of the taxes are cantonal taxes, and there, if you come in, say that I want to move into your region, etc. You can negotiate a tax deal. And very few countries in the world where you can do that because they're very pragmatic, the Swiss. So it's a great country to live in. It is very, absolutely. No, but.
And it's beautiful as well.
Yeah. But so Norway is a great country also. Beautiful nature, lovely people. Sadly, not politicians that you can respect, like most other European countries, sadly.
Yeah. Okay, Egon, I think we'll leave it there. We've talked about a lot, and I thank you very much for your time. I really appreciate this, and I hope to speak to you again.
Yeah, well, good to talk to you too, and well, you should come and see us in Switzerland, and it's a wonderful country, and I'll come and see you in Norway one day also. I love Norway too, so.
Yeah, we'll meet soon. I'll come and visit.
Okay.
Bye-bye.
Thanks. Bye-bye. Hej då.
Bye. Hej.